Right friends, welcome back to 7th module of this abbreviations. The first one is CAFROL. CAFROL is a Center for Advanced Financial Research and Learning. This is the institute established by Reserve Bank of India, started functioning from Mumbai. The main purpose of this institution is to develop it into as a global institution for research and learning in banking and finance. It started functioning from Mumbai, please don't forget. Look at the next one, compound annual growth rate. CAGR is compound annual growth rate. If a company was established 3-4 years ago, normally the growth rate is calculated from that instance up to till date on the basis of compound annual growth rate. All of you are well aware about compound interest. Similar way the growth rates are also calculated. That's why it is called compound annual growth rate. CAPEX. CAPEX is capital expenditure. What is the difference between capital expenditure and revenue expenditure? Capital expenditure is basically for creation of assets. If you purchase some land, if you purchase some house, that is capital expenditure. If you are going to 5-star hotel and eating something by spending 1000 rupees, that is revenue expenditure. So capital expenditure is basically for creation of assets, right? CASA, current account, savings account. This CASA ratio is basically important from banking perspective because the CASA percentage determines the cost of funds for the banking system. When CASA percentage is more, cost of funds will be less for banking system. Right? When CASA is less, cost of funds will be more in the banking system because this CASA deposits, the interest rate is very less. If it is current account, no interest. If it is savings account, around 4% interest. Right? Look into the next one, CBLO. Collateralized borrowing and lending obligation. Collateralized borrowing and lending obligation. The organization whichever borrows, they have to pay back in time. And for that, as a security, government securities like treasury bills or dated government securities are used. Treasury bills or dated government securities are used as collateral security when one financial institution is borrowing from other financial institution. So this collateral borrowing and lending obligation is a money market instrument, and here the collateral security is treasury bill or government dated security, please don't forget. ULIP is unit linked insurance plan. Unit linked insurance plan combines not only insurance but also investment. When you combine both the properties of insurance and investment, it is called a unit linked insurance plan, and the regulator for ULIPs is IRDAI. Please don't forget, IRDAI is headquartered in Hyderabad. CCEA is Cabinet Committee on Economic Affairs. For taking important decisions, some ministers in the Union Cabinet will sit together, and this group is called Cabinet Committee on Economic Affairs, and the Prime Minister is the chairman of Cabinet Committee on Economic Affairs. Please don't forget. Clearing Corporation of India Limited. Lot of trading is taking place in government securities. Lot of trading is taking place in money market instruments. Similarly, foreign exchange transactions. The agency CCIL is the clearing agency. CCIL is the clearing agency in government securities, foreign exchange and money market instruments. CCIL was established in the year 2001. Please don't forget. Look into the next one. DFHI Limited. This is Discount and Finance House of India Limited, or you can say primary dealer. Primary dealer means who transacts in government securities. primary and secondary. The government securities transactions, that is securities transactions in treasury bills, dated securities, take place through primary dealers, and for the banking system as a whole, this SBI DFHI acts as the primary dealer. This DFHI acts as the primary dealer for the banks. Look into the next one, DGBA RBI. This is Department of Government and Bank Accounts. This is one department under Reserve Bank of India. DICGC, Deposit Insurance and Credit Guarantee Corporation. If a bank goes into liquidation, DICGC guarantees you a maximum payment of up to rupees 1 lakh rupees, and the premium will be paid for this insurance by the respective banks. DMIC, Delhi Mumbai Industrial Corridor. Delhi Mumbai Industrial Corridor is coming up in the western part of the country, right? And look into the next one, OTP. All of you are well aware about OTP, one-time password. If you are doing some e-commerce transaction, you will receive one-time password to your registered mobile so as to act as a second stage authentication. TRI, differential rate of interest. This scheme was brought in the year 1972, where the banks are required to lend 1% of their previous year's lending at a 4% interest rate to the poorest of the poor in the country. DSCR is a debt service coverage ratio. You have taken loan, you started a company, you have taken loan, you have to pay back 1 lakh rupees to the bank every month. If your income every month is rupees 1 lakh, then your debt service coverage ratio will be 1 and you will be perceived somewhat safe. DSIBs, domestic systemically important banks. Please don't forget this. S stands for systemically. DSIBs means domestic systemically important banks. The main purpose of systemically important banks is they are very important in the financial system. They are too big to fail. If they fail, then it will have adverse impact in the economy as a whole. And please don't forget, Reserve Bank of India recently nominated two banks, State Bank of India and ICICI Bank, as the domestic systemically important banks. National Disaster Response Force. Whenever there is any eventuality, then National Disaster Response Force will be called, and this is as per Disaster Management Act. This has got a statutory status as per Disaster Management Act. Free trade agreement, when there is free trade agreement among the countries, then trade barriers will be less. Free trade agreements are normally signed between various countries. There may be bilateral, there may be multilateral. You may ask what is bilateral. When the agreement is between two countries, then it is bilateral. When the agreement is between several countries, it is multilateral. Next one is GDR. GDR is Global Depository Receipt. That means these are the receipts released in various countries against the underlying shares in a foreign country. If someone in Russia wants to purchase Indian stock of Infosys, then he can purchase Global Depository Receipt released in Russia, where the underlying share will be Infosys. Right? ADRs and GDRs convey almost the same meaning, but ADRs are American Depository Receipts and GDRs are Global Depository Receipts. GIRO, Government Internal Revenue Order. Government is trying to come up with a unified payment system across the country, that is Bharat Bill Payment System for all types of retail transactions, and Government Internal Revenue Order is the term pertaining to unified payment system across the country. Look at the next abbreviation, GM crops. GM crops is genetically modified crops. This word pertains to agriculture where the DNA of the crop is modified so as to get more yield at the same time, so as to ensure better pest resistance. So GM crops is genetically modified crops. Look at GSLV. GSLV is a geosynchronous satellite launch vehicle. Look into the next one, HFT. HFT is held for trading. Held for trading. This is the term associated with accounting when some securities are held for trading. MNP, or if you are well aware, mobile number portability. Mobile number portability is if you have the number in Lucknow, if you migrate to Bangalore, you can keep the same number, right? So this is about the 7th module. Please do join for 8th module. Have a nice day. Thank you.